Good morning, everybody. How are we all doing? Making sure my mic's working. Happy Monday. Happy September. First day of the month. Morning, Danny, Virginia, JC, Roger, Fire, morning, Thermowet. Hope that's a vacuum cleaner. Morning, Gregors. How we doing? Right, Monday. Aussie New Zealand's hit ADR already today. Big move on the Australian dollar this morning. Well, I say big move, but it's quite a strong move at the London Open. So big kick up for some unknown reason. No reason why it should be. Where's my pen gone? Why are you down in that bottom corner? Weird. Holiday in the US today, yeah. So it's Labor Day, I think it is today. So there won't be any much trading this afternoon, if anything. So the London session basically today, usually fairly quiet. Usually when you've got one party on holiday, we don't tend to get an awful lot of movement, but we'll see what happens. But yeah, so no, won't be trading the indices this afternoon. This morning, oh look, lovely, straight into a hedge on the FTSE this morning. Great, thank you. No trade on the DAX, too tight. So yeah, we'll see what happens, but it's usually a fairly quiet day, basically. So right, so we'll start off with the news, and we'll kick through all the FX pairs this morning. There was nothing exciting at all overnight. Australian building approvals came out, but yeah, nothing over the weekend at all, really, news-wise, newsworthy. So just usual sort of waffle, but yeah, so quiet weekend, no gaps, nothing exciting there at all to speak about. Today we've got obviously no news at all, it's totally dead. We've got the bank holiday, obviously, so today I would suspect you're just going to get rotation. So intraday, if you look at yesterday's high and yesterday's low, if we do get to those sorts of areas, you're probably going to find we're just going to rotate around. So if you want to do any quick little scalpy moves, those are probably the best thing to do today. But other than that, nothing else exciting. Tomorrow, we've got the CPI. So it's a fairly busy week this week. We've got CPI for the Swiss franc tomorrow morning, 7:30. That's forecast to bounce. It's very difficult to call the Swiss at the minute because obviously they are changing interest rates without notification. So we've had a lot of movement on the Swiss, mainly bullish, obviously because of the yen move, the intervention, and obviously what's going on in the Middle East at the moment. So nice big moves on the Swiss, but we've gone into a sideways move for the last sort of, really for the last sort of month. Most of August was dead, totally sideways, really. So difficult to call the Swiss. We might get some life kicked into it with the CPI numbers tomorrow. So it's forecast to bounce, which in theory should be bullish for the Swiss. We've got manufacturing PMIs for the US dollar tomorrow afternoon. I'm on 2:15, 2:30 tomorrow, so we'll watch that unfolding live. Forecasting, again, basically a slight uptick. So bullish potential for the US tomorrow. We've got GDP figures coming in for the Aussie. On Wednesday, we've got the interest rate decision for the Bank of Canada. So again, we're looking for a drop again from Canada. So the last move we had from the Canadians was a drop of 0.25%. We are forecasting another drop of 0.25%. Inflation is getting close to 2% target. It's still dropping. So there's absolutely no reason why we shouldn't get that 0.25% drop. If anything, there is the outside chance of it dropping a little bit faster, but so potential bearish movement on the Canadian. If you look at all the CAD pairs, we've not really had an awful lot of movement for the last few weeks on most of them. US CAD's moved a little bit more. But yeah, so it's not going anywhere. If anything, we should see continued sort of weakness coming in. So if we get decent bounce on the CPI for the Swiss this week, and the Canadian does drop the interest rate as expected, obviously, there's a possibility of a good drop on that one today, this week. we've got US dollar, we've got job openings, and then we've got the press conference. So obviously this is where we're interested in the forward guidance for the Canadian dollar. So once that interest rate decision comes out, assuming it is as expected, you will probably get a kind of whipsaw move or a move in the direction. And then they'll hold it, wait for the press conference to come out. The press conference is where they're going to lay out what their plans are moving forward. If they come out bearish and they say we're going to continue to drop month on month as long as CPI is coming down, you'll get a bearish move. If they say this is probably where we're going to stop and go for a month without moving, it will pop up. So that's the important part. That's where we get the forward guidance. Got Bullock speaking Thursday morning. It's non-farm employment change on Thursday as usual, and unemployment claims, although that's normally on a Wednesday because it's Labor Day. Obviously, it's been pushed back a day. And then Friday, it's non-farm payroll. It's the unemployment rate. Unemployment rate is stable at the moment and continuing to be stable. So if that unemployment rate drops and we get the 4.2, which is what is forecast, or we get lower than a 4.2, we're going to see a big rally coming on that US dollar potentially. But overall, we are bearish US moving forward. And this is one of the things they're keeping a very, very close eye on. So if unemployment does go up, we're going to see that interest rate drop come down by 0.5% more than 0.25% chance on the 18th of September. So there's a good chance we may get a big bearish move if that pops up above 4.3, possibly above 4.2. So interesting Friday, basically. We've also got the unemployment rate for the CAD. Obviously, these two are very closely interlinked, the CAD and the US. So if we get unemployment going up in Canada, which is forecast, and that goes up as well, we could easily get a 200, 300 ADR move on the US. So Friday's the big day this week, obviously dependent on what happens with the CAD rates as well. Clean break to the downside on the DAX. FTSE's running down into the kind of rejection point on Friday. We've got gap fill to do as well from last week. So target to the downside, I'm happy with that. That's where we opened up. It's a long way to go though, 5 hours. It's going to be an ADR to get out of that one today. DAX moving nicely. The DAX pushing down yesterday's low or Friday's low, which is actually Friday's kind of low at the open and in New York. Target to the downside initially, so just watch that level. We'll probably find we get some support down there. If we break that though, a bit difficult to pick another level down there, but we've obviously got the low from last Wednesday, which is also Tuesday's high. So 125 ADR is kind of next proper support. Breaking nicely this morning. Come back to that in a bit. So that's your news coming up this week. It's going to be a tricky one because starting next week, we go into interest rate decisions. So we're starting off with the ECB next week, and then we're going into the following week, which is where we have the US and the pound and the yen. Yeah, so back-to-back interest rate decisions for 3 days. So it's going to start to get busy. But yeah, that's this week done. ADRs today, there is only the one, Aussie New Zealand. It's a new month, so fingers crossed we don't have a month screwed up like we did last month, where we had that 300% ADR move in 2 hours, which took all the monthly ranges kind of 150, 175 within 2 hours of the open. So at the moment, obviously there's no monthlies. It's Monday morning. There's no weeklies. The only thing we've got to look at is Aussie New Zealand on the hourly, or rather on the intraday. So there's an ADR hit to the upside there. We're pushing out this propulsion gap from Thursday into Thursday, Friday highs at ADR. So Good looking scalp opportunity down back into that propulsion gap there. Fairly tight reversal alert as well. So not a bad little trade opportunity there if you want to take an intraday short. Bias on the Aussie New Zealand is a little bit tricky at the moment. So New Zealand dollar is bearish, Aussie bullish. So kind of the bias really should be long from a fundamental perspective, but as you can see, it's not working that way at the moment. So I think the market is probably expecting some kind of interest rate drop to come from the Aussies at some point, but we're not getting it at the moment, obviously, because the inflation figure bounced again. They're up at 3.8. They're not getting anywhere near target. Everybody else is getting close to that 2% target, bar the New Zealand and the Aussies. Yeah. So New Zealanders have already gone because their interest rate was so unbelievably high and they're worried about unemployment. We've got the same thing here with the Australians. There's absolutely no reason to drop that interest rate. The New Zealanders have already gone. So obviously the bias on it is long Aussie, short New Zealand. Not really what we've seen over the last sort of week or so. So at the moment, if you look at it on a higher time frame, we are putting in a higher low in market structure. So this is potentially where we will go from. So good looking buy opportunity, but intraday we're a quick sell. So I'd much rather take ADR shorts and RSI extensions to the downside on this one fundamentally, but it is a good opportunity short, but be careful, it's a little scalp. Still breaking down on the DAX. Not particularly convincing. I wasn't actually expecting this month, this much movement at the open, to be honest, considering it's a bank holiday in half the world. But anyway, SIH clean break for August. DAX 5, FTSE 4, Dow 4, NAS 5, S&P 3. Thank you for those statistics. Labor Day greetings. Morning, Franco. Barbecue today, is it? Very nice. Had a barbecue on Saturday. I can see help wanted everywhere. It's the lazy percentage that's going up. Yeah. Yes. They can't be bothered to work factor. Unemployment. Yeah, we'll see what happens. It's going to be an interesting week this week. I think the Fed have come out and said that one of the main focuses and one of the main reasons for dropping the interest rate is unemployment. They're worried, really worried about the labour market cooling off. So very important figure, unemployment. It has a big impact on interest rate decisions. And the decision, obviously, this time round is we're dropping. We know that. But the decision is, are we dropping by a quarter or are we dropping by a half? And it seems to me at the moment, the market is looking more at that because the US dollar isn't coming down like a steam train, is it? It's coming down fairly gradually and it's pushing a little bit at the moment, which is good because I've got some longs on the US. So I think it's more focused on that. So if that does go up above 4.3, that will become the more likely interest rate decision and the market will need to adjust itself for that. So big day Friday, potentially, and Thursday as well, because unemployment claims also give us a clue as to the unemployment rate. If your unemployment claims go up, it means there's more people unemployed, which means the unemployment rate probably has risen. Doesn't necessarily track that way all the time, but it's an indicator. So, like all indicators, the actual thing that happens is nothing to do with the indicator. Morning, Sega. I continued with H1M5 last month. All pairs with half risk. Yeah, that's fine. You do what you want to do. There is no right or wrong. I have no idea what is the best RSI setting from month to month. I don't know which time frame is best. No one does because it's impossible to see the future. Right now, I have not got any strategy running. I'm running manual entries. So I will take what I like the look of, basically, which is basically going to be H1 and H4 RSI extensions and good levels, basically. So, for example, Aussie New Zealand, if we were to push up into that area there, I'd be today, if we got 150 ADR today, I'm hitting the short button. Yeah, so, or at least put a sell stop on it. Right. So we're going to go through all the pairs this morning. That's all the news covered. Obviously the market today is going to be very hit and miss, basically, because obviously we've only got half a session. So nice move on the DAX, not quite hit target. We are through yesterday's low. So that's Friday's low here at 2R. That's not the low, it's a little bit earlier on in Globex. Not in Globex, sorry. This is the DAX. Be worried if it was in Globex. So it was at the open, basically, back here. Or rather, you know, the silly broker candle bit before the open. So yeah, so that was the low. That kind of is the low there. So we've broken through that. Limit orders triggering at the moment by the looks of things. I'm just going to put my stop back. I've got a trailing stop running at 2R. I don't really want to just take a 1R on this because this is a very fast break. So there's potential for this to actually get some decent legs today. So that's not a bad, that's a good level to target as well. So we'll see how we get on. We've got 1 minute left on this candle, but basically it's a 15-minute sell-off. Still going. Just thinking I've got Hedge on. I've got Hedge on here. That's yesterday's low on the FTSE just gone. Yeah, market really selling off today. I was just going to take that off then and it popped down again. I'm just getting ready to get out of one just in case it doesn't hit target. 5 minute candle's about to close, so you normally get a little bit of movement around it. So there we go, target hit. So TP1 hit, 3R, trailing the second half. I suspect this will probably pull back. So we've got big double propulsion gap there at the open. So that whole area there, and in fact, the opening range break candle as well from basically the first 15 minutes today. And if this continues down, this is going to become a propulsion gap as well. So the entire market is one whacking great propulsion gap this morning. Really selling off. On an unsettled note in mixed territory. Why? That's really helpful, isn't it? European markets expected to start the week on an unsettled note in mixed territory. Do you want to be any more cryptic? Why? Don't care. Just made a load of money. Not really worried. So 430 hedge on the FTSE. Got 600 open at the moment on the DAX. So 300 banked. So 130 pound basically is roughly my hedge worst case scenario, but it's not going to be because I'm going to lock some more profit in. So basically that's going to pay for that. So if we can get out of the FTSE, be a nice profitable day. So I'm going to let that run and see where it goes. Morning everybody else. Election results in Germany have affected the DAX? Quite possibly, yeah. So obviously we had a right-wing party take a couple of states or a state in Germany over the weekend, which is happening worldwide at the moment. Yeah, right-wing politics is becoming more popular because of what's going on in Europe and everywhere, really. But yeah, so that's probably why they're talking about the unsettled market this morning. Obviously, it's dragging the FTSE down with it at the moment, but we'll see. Certainly a bigger open than I was kind of anticipating this morning, but who cares? Morning, noob. I wanted to buy some euros Friday evening, but looks like it's starting to strengthen already now. Yeah, so the euro will be going up. So if you look at all your euro pairs, you'll probably find your Australian dollar's rallying at the moment. That's why that's down. But yeah, so euro pushing at the moment. Won't push against the Swiss because they're correlated. It's just not that much of a push, is it, to be honest? Bit of a push. So obviously if the DAX coming down, usually the inverse will be true of the currency. Morning. There's new people in here today going, what the hell is this guy talking about? Right. So we're going to run through all the FX pairs, have a look where everything is this morning, see if there's any decent opportunities to get into anything exciting. We'll start off with the Aussies. So as of this month, September, I have turned the EA into manual mode, basically. So the EA is going to manage all my positions as normally. It will scale in for me, do the position trading element as normal. It's just I'm not going to rely on RSI entries on any time frame or ADR on any time frame. I'm just going to be manually taking first entries, either with a buy stop, sell stop, or just getting in, basically. So it's still going to be trading, it's position trading. Your entry method is a lot less relevant than what you do with it after you've taken the entry. So I'm just going to be basically taking manual entries. But if there's an RSI extension, that's still going to be a reason for me to get in. It's just I'm not going to let the EA automatically get me in. Obviously, one of the reasons is at the moment, stuff has the potential to push a lot at the moment and squeeze quite a bit at the moment. So I just want to make sure that my entries are a little bit better and at better levels. So just confluence, basically, if we push up to here and we get an RSI extension, yeah, it's not as good an entry as if we push up to here and get an RSI extension. Yeah, so it's a case of just checking the charts every 4 hours or so, really, and just going, oh, that looks good. And, if we're up here, if we're sitting here, and we're close to that, we've got a big RSI extension already, I'll just basically I'll stick a sell stop on it. And I'll just let the EA get me in if it kicks in, rather than just getting in automatically. So what I've done, just to show you what I've done, is I've set the EA up. Can you see that? Yeah. So I've set the EA up basically on every single pair. And all I've got basically is both entry criteria set to false, half an ADR, 0.5% over 1 ADR, 1.2 scaling, 3/4, no exit targets. I set my targets manually. Going drawdown control if we get into 6 positions, aggressive drawdown control if anything gets into 3%. That's it. So basically the position trader EA is managing all my positions for me, but I'm taking the entry. So I've set it up on everything. I've set it up on the hourly charts as well, rather than 15-minute. Only reason being, if I'm using trailers to get in, I want them trailing on the hourlies rather than the 15 minutes. So, and then obviously if I'm in a position, I might well go and just change the time frame down. But want to be a bit more flexible, really, at the minute, because this month is key. Specifically, the 18th of this month is key. Yeah, this is the first interest rate change that we are going to have from the US. I don't know when the last one was. Let's look. So we went to 4.5 in July last year. So, this is over a year we've been sitting stable on the US with no indication of change, or rather loads of indication of change, which change every 5 minutes. But this is the first month we are actually going to change interest rates. So I'm just keen to see what the market reaction is to that, because if they're all going to suddenly pile out of the US, that money's got to go somewhere. And all that money that comes out of the US is going to flood all the other currencies. So it doesn't matter if the euro is dropping interest rates. If they need to put that US dollar somewhere, It could go into gold. It could go into another FX pair. It could really drive the Swiss franc and the yen a lot, because if you want to put it somewhere and you don't want it in the US, the safe havens are the Swiss and the yen. So I just want to see what the reaction to that is before I decide whether or not we're going to get a nice steady interest rate decline, as we had a nice steady interest rate ascension after COVID. Yeah, so when we started increasing the interest rates 2021 after COVID, wrong one. Yeah, so there's your COVID panic. And then we started to increase interest rates as 2022, actually, wasn't it? And then we had that nice clean move, like 0.5%, 0.25%, virtually all the time. There was a big one there, like 0.75, but at least we knew what was coming. Yeah, so it was all like very steady on the way up. Yeah, I want to see it. I don't think that's going to happen. I think what we're going to see is erratic movement from the US on the way down. I think they're going to drop the interest rates, not drop the interest rates, see what CPI does, threaten to put them up again, and actually drop them. You know, I think it's going to be a bit of a messy move down, which is why I think you need to be a little cautious. Don't forget the US is the major currency that drives all other currencies. So this is the most important day we've had for over a year, coming up on the 18th. So be cautious. If it takes off and does 400 ADR or something stupid on that, do not mean revert it. It's going to possibly carry on. We don't know. So just, you want to be in control of your trades rather than let an EA go, oh, I'm stupid, I'm just going to press the button because RSI got extended. No, you got to think about it at the moment. Unfortunately, it's your job. Morning, Christian. Good morning from Chile. Wow. Is it Chile? Probably not. Continuing the move down on the DAX. So my TP2 on the DAX is this monthly level. I'm just going to move that up. Or should I move it down? This thing's really tanking this morning, isn't it? Well, that's a very, very, very keen target, 125 ADR, but hey, what the hell? Oh, hello. Swiss manufacturing PMIs, I don't think that did that. That was a big, big, big sell-off. Massive sell order just came in. Straight into the monthly. So that's your 2-month high. We just come kiss that. Like, you saw how quick that candle went there. So that's ADR, basically. We've hit ADR on the DAX. Maybe we'll hit 125 ADR. No, who knows? It's making me think twice about this target on the FTSE, the way this is selling off this morning. So I'm just going to move down into the gap just above ADR. This is really selling off fairly fast this morning. So we've had one literal attempt to go bull in the last half an hour, which has obviously dramatically failed. So limit orders triggering at the highs. So you always get limit orders sitting at monthly and weekly highs and lows. So that is your limit order trigger there. So we'll see if there's enough limit orders there to overrun this. I suspect probably not, because the limits that have triggered there will just be placed probably to get out of positions rather than to get into them after what we've had this morning. So we'll see where that goes. Big moves. All good. Morning, Blue Trader. Cloudy today, is it? Yeah, cloudy here as well. Raining here. Rain. Actual rain. Water coming out the sky in summer. It's weird. Anyway. Right, so we'll start off with the Aussies. Morning, Champagne. So Aussie.CAD sideways at the moment, as you can see, for the last week. So that's your last week's range. Friday, obviously, we put in the lows of Tuesday. And we stalled and it's broken back up again. So we're stuck in a pretty tight range on Aussie CAD at the moment. And no RSIs on the hourly or on the 4 hourly. Haven't actually looked at the RSI dash this morning, have we? Let's start there. The reason I didn't look at the RSI dash this morning was because I scanned it this morning and looked at it and went, there aren't any RSI extensions, and it's completely gone up my head. But yeah, there is one RSI extension on Euro US on the 4 hour, and it's just coming out of extension rather than going into extension. So yeah, there are no RSIs this morning. So yeah, as you can see, we're sideways now for the last couple of weeks. Bias on this one at the moment, you've got to be long everything Australian dollar at the moment because they're not dropping interest rates and because their inflation is still rallying and they're sitting at 4.35%. They still have room to the upside to move. The thing that's holding them back from moving to the upside and increasing that up a little bit more to 4.6 is the unemployment is starting to climb gradually, and that isn't coming down. So they're stuck basically. Yeah, you can't put that up if that's going up. However, if that's going up, you need to put that up. They're stuck. They can't do anything at the moment. So we need to wait for more data before they make a decision, which is probably why we're not seeing rallies on the Aussie at the moment. So tricky at the minute to call a direction on it. The Canadian dollar obviously is going to come down when the US dollar rates are reduced. We've got the Canadian rate also being announced, which is going to be a drop. So you've got to say CAD is going to be bearish moving forward. There is no way to go but up on this. So you've got beautiful rejection here for the last couple of weeks at this level, and it's starting to rally again today. So it looks like a lovely long opportunity. You've just had a reversal alert go in this morning on this one. So on Friday, actually. You'll have had one on the 5 minute probably. Yeah. So you've had one on the 5 minute. So bulls taking control at the moment. No reason why it shouldn't continue to rally. However, you've got a very clearly defined range high, and it's within an ADR pretty much, isn't it, from where we are? So there's no room to trade it at the minute. You've got to be getting in at these lows really, really tight. So yeah, there's nothing much you can do with it at the minute. Aussie dollar Swiss, very much the same. So the Swiss franc, all the Swiss franc pairs are stuck. We've had the massive rally on the Swiss with the yen on the intervention from the Japanese yen. And the Swiss is basically just stalled out. So Jordan has come out and said that they will intervene and they will move this as and when required. Really, the move should be kind of strength in the Swiss franc and strength in the Australian dollar with what's going on at the moment in the world. So this is a bull against a bull, even though they're dropping interest rates, which obviously equals a range. So it should remain range bound unless it kicks off in the Middle East. If it kicks off in the Middle East, you're going to be down here within just like that, basically. So it's hard because you want to be long on the Aussie, but you also want to be cautiously long on the Swiss as well. So again, I'm not really trading this one. Nothing to trade on it. If you want to take RSI extensions on the hourly, that is at the moment beautiful. So in the last 3 weeks, you've had possibly 4 entries, but you had a short opportunity there. But, you know, again, it's not going anywhere. ADR is 47. There's just no room to trade it. So it's something you need to be looking at scalping on silly timeframes. That's all you can really do with it. So watch the range highs and lows, very clearly defined on the 5 minute chart. Look. Yeah, got 2 week high, another high. How's that last week's high? Ah, my chart. Oh, that's spread, isn't it? That's weird. Weird. How can my broker be showing me data on the 15 minute chart hitting that level? Yet on the 5 minute chart, it didn't get, oh, there's a candle, look. That confused me then. There we go. That's a wick. Monday morning. Right, so yeah, so clearly defined range, 5-15 minute. Yeah, that's last week's high. You've got a previous level coming up as well from an old week. You got weeklies down here with a monthly level. So buy it down here somewhere, sell it up here and up here. So you've got a range basically of 175 ADR to 150 ADR if we push up into these areas this week. That's really where I'd be interested in doing anything, but probably not. Yen pairs, the same. You can't trade the yen at the moment unless you're scalping with a stop loss because there's just no room. It's dead. So intervention, biggest intervention we've ever had from the Japanese, fastest move we've ever had on the yen. It's the biggest, craziest thing we've ever seen. Nobody knows what to do with it now. So we're just going sideways, going, what next? No one really has an inkling what the Japanese are doing with their economy. They're using interest rates to control inflation now, but it's not doing anything, as you can see. So bias is kind of long, but you've got to worry about anything kicking off in the Middle East driving the yen. So nothing really you can do with this one either. It's stuck, totally stuck sideways. Same for all the yen pairs. I'll go through all the yen pairs. They're all pretty much the same, apart from the US yen. So you're sideways, basically range bound. You can see the ranges on these. Look, I mean, you got a weekly low, a weekly low, a weekly high, a weekly high, monthly, weekly high, monthly, weekly low. So it's very clear. That's what we're doing at the minute. We're up at the highs. So we're just about to break out the highs, actually. So potentially looking for short opportunities if you want to trade it, but I don't want to trade it at all at the moment. No idea where it's going. So all the yens are the same. We're in shock after the intervention. Market doesn't know what to do, so just leave it. If in doubt, stay out. Yeah, New Zealand dollar's rallying a little bit more, and the US dollar obviously is the one that has moved more because obviously we've had that weakness in the US, although that is abating now. And this is the one, obviously, which they're watching for intervention. So I'd be very closely monitoring the 150 area, which is sort of back here. So that was the previous intervention before. So yeah, if we do manage to get back up, I mean, it's 200 ADR. So this week, we got a lot of US potential news with the unemployment. So if it does rally the US this week and we start getting up into these levels, the Japanese are going to be watching this level again. So it's a 50% retracement as well on the previous intervention leg. So I'd be carefully watching sort of 150 to 152 level. But other than that, I'm not really interested in playing with it. I only want to trade it long because of the swaps. So I don't really want to be short on it because it's cost a fortune in swaps to short it. So yeah, all the ends basically, not a lot you can do with them. Aussie New Zealand we've looked at this morning already. It's potential short at ADR. You're just tapping into the high of Friday now. And again, limit orders triggering at the highs. 125. If we can push up into this double weekly level at 150 ADR, I'd be interested. So this is a prime example of the type of trades I'm looking for. You know, if something gets really stretched, like properly stretched, 150 ADR, we've got confluence of support resistance at the same point. And by that time, will be an hourly RSI extension. So it'll be 150 ADR, will be an hourly RSI extension at resistance. I'm happy to put a trailing stop on that, sell stop, and just get me in on bearish weakness, or just hit the sell button there, scale in on it. You've got that area there, which is kind of at that point going to be, so that's 1 ADR, 1.5 ADR of movement. So I'm getting in 0.75 ADR apart. So if we get into a nice sell opportunity there, that'll be a second entry and a third entry. By that time, that'll be really massively stretched. Get out on an exit. But I want to see it at a proper level. If you're trading ADR on automation and you've got it set to ADR, it's going to get you in today, and it may well work. We don't know what's going to happen, do we? So nothing wrong with that. I just want to make sure I'm first of all looking after exposure, and secondly taking best possible opportunities, especially this month, just because of what we got coming on the US. Aussie US, already got shorts on this. I've got two entries really close together here. So I might get out of one of those. In fact, I think I'm probably going to do that. I'm just going to stick a break even on that one. So looking basically for last month's high as an upside for next entry. I don't expect we'll go anywhere today because obviously the US session isn't there. And it's unlikely we're going to get a lot of movement in London. So we are up at this previous monthly high. We just broke out of it, but in the last week we haven't managed to get anywhere. This is this propulsion gap basically here is being bought up at the moment. This is where Powell announced obviously they're going to drop the interest rates. So we were expecting that to happen. So we got a bit of a knee-jerk reaction in the market. Went, yeah, we know. We've been factoring that in. Yeah, so this Powell speech at Jackson Hole about changing interest rates, we knew it was coming. We just didn't know when exactly, and we didn't know how much exactly. So the market's got confirmation of what it was pricing in already. So don't think there's any reason why we shouldn't get a little bit of strength on the US. It'll be figures led this week. We'll see what the news is, but if we get some positive numbers on the US, we should retrace this before the 18th of September. So got shorts on this one. Not looking for massive targets on it, and I want to get out on the propulsion gap fill just because I'm a little worried about them holding it for a couple of weeks, which is obviously another possibility. Aussie obviously is a long as well, so it's not the best bias. CAD Swiss, again, same sort of thing, sideways. The difficulty is you look at charts like this and you go, well, it's obvious. You just sell at the highs and buy at the lows at the moment. And if that one doesn't work, probably within half an ADR, it will come back again. This is the problem with technical analysis. You're looking at what's happened in the past. By the time it gets down to there next time, it could absolutely collapse. It's got nothing to do with this level. Yes, we'll buy this level as long as the fundamentals don't change and the weight of orders at that level doesn't change, which it can do. So the bias on it is both directions at the moment, very hard. Sorry, no, this is CAD. The bias on it is that. So yeah, much more interested in sells on it. So looking up at these highs, I'd be interested in shorts if we get up there. Yeah. So nothing really can do that at the moment. Yens we've covered. Euro odd, got out of that one on Friday. So that was a nice easy trade. So that was a 4-hour RSI extension. Yeah, first entry, second entry, exit. Nice easy one. So at the moment, just waiting for it to set up and do something. Sorry. We've just installed this app at the weekend, a family app, so we can all keep track of where everybody is type thing. Unfortunately, every time somebody does something, it goes really annoying. So every time someone gets in the car and goes somewhere, it goes, somebody's got in the car and gone somewhere. It's like, I don't care. Anyway, yeah, exit on that one. That was my kind of target, but obviously Friday afternoon, nice move into propulsion, just took the money. Also, just wanted to get as much as I could in the bank for August. So yeah, that's played out already. Euro is bearish, Australian dollar is bullish, bias is short. Again, I was counter trend on it. So ideally, I'd like to see this euro rally a little bit up into 175 ADR, get that propulsion gap filled. If that propulsion gap doesn't act as resistance and we continue the move down, we'll be looking to head up into here. So that'll be a scale in possibly 4 positions. But yeah, there's nothing to do with it at the moment. We're just sideways. There's no extensions on RSI. There's no ADRs. There's nothing. So just waiting. But that's a really good looking level of resistance to the upside. Yeah, so that propulsion move is a good place to start selling. But we're not there yet. Euro CAD, again, bias on this one is difficult. Euro short, CAD short, sideways. So lovely sort of bounce down at this level from Thursday last week. We did take it out yesterday, or rather on Friday, and it's rallying back up again. So I think this could easily get back up into that area there and retest the start of the downward move that we've had for the last week. So just looking for some kind of pullback to get in short on it really at the moment. But right now it's a buy. So if you're trading H1, M5, you are in this already, probably from here as a first entry, second, third. So you'll be in 3, maybe 4 positions on this one. Yeah, it's going to pull back on that leg at some point. So we're just waiting for the pullback to get underway. Canadians, obviously, we've got news coming up. Euro, we've got the news coming up. So there's good potential for this to move this week. But yeah, should be an upward movement as they start to scale out some of that leg. Which one is going to be the stronger? Difficult to tell. Canadian, obviously, changing interest rates. And then we've got the US changing interest rates. So Canadian dollar is going to be the most active out of both of these this month. Euro Swiss, sideways at the moment. So bearish stance on this one. I'll be looking for entries to the upside, ideally. Based on what's going on in the world, there's more chance, I think, of the Swiss franc powering up than dropping. We have got the Swiss CPI numbers coming out this week. That's not it. Wrong day, wrong week. Yeah, I thought it was tomorrow morning. So yes, Swiss CPI tomorrow morning. Forecast to bounce, which will basically make the Swiss franc stronger. So right now it's sitting in the middle of nowhere. You can't really do much with it. If we can get extensions up into that sort of accumulation there, so the propulsion gaps here, good looking start of a short option. And then you've got this area here. So you'd be scaling in 3, 4 maybe by the time you get up to the highs, if it gets up to the highs. But it's a tricky one because the market structure on this is obviously bearish. Yeah. So where we are now, we should be putting new lows in. So to get back up into these highs, it's kind of going to invalidate market structure. But that's where I would be wanting to look for shorts. Euro pound, I've got longs on at the moment. Break evens 125 ADR. Just looking for a pullback on this leg at some point. Obviously that we got the pullback on, that was just like a flag break. So that is kind of what I would expect us to pull back on. You can see my target is there. Yeah, so that low basically that we hit and this propulsion move here. So that's your propulsion move there through that low. So that's my target to the upside. Whether I hold it there or not, I very much doubt. We've got too much news coming up with everything coming up this week and next week. So it's going to need to get there very, very fast. And that's 300 ADR from where we are at the moment. So it's not going to get there very quick, is it? So we've got this double bottom here, which is this tiny, tiny propulsion gap at 150 ADR. So I'll see where we are when we get there, what my exposure is. But yeah, just holding this at the moment, just waiting for the pullback on that leg. We're pulling out the monthly lows. So that's last month's low. That's the previous month's low. As you can see, they bought this up multiple times, made the new high, pulled back. That's where the market structure really shifted there. So you got a low, high, higher low, higher high, higher low, And off we went. And that was that stupid 300 ADR move at the beginning of August, which came out of absolutely nowhere and screwed everything up. So we are back to basically where we were. Bias on this one is that both dropping interest rates, both close trade partners. ADR is terrible at 32. It takes forever to do anything. So it's just one of those ones where you get in and you have to sit in it. Euro yen we've covered, Euro New Zealand. Longs on that one at the moment as well. So bit of a distance between the last two entries on that one. 150 pips, 1.5 ADR because of the massive drop we had. So we've ranged out here for a couple of days in the propulsion map, so propulsion gap. So that was the last interest rate decision on the New Zealand dollar where they didn't change the interest rates. That was where they did change the interest rates. So obviously this is not playing ball at the moment, the New Zealand dollar with interest rates. It's just paying no attention to the interest rate decision fundamentally. It's moving off the interest rate decision, but it's not going in the direction you'd expect it to. It's random. So this is a lovely buy. Obviously this propulsion move. So we've just basically undone the nonsense move for we're not changing interest rates, so let's rally like crazy. Obviously as the euro is dropping interest rates and should be weak. Again, it's not paying any attention to the fundamentals, was it, in July? So we're back down into this accumulation. It's a previous accumulation. It's a failed price discovery move to the downside. So it wants to be bullish. So good looking long at the moment, already in that one. We're nearly ADR. Oof. Doesn't get any more accurate than that, does it? ADR. There you go. You hit ADR. Hit ADR, or rather you haven't hit ADR because it hasn't alerted, but it's ticked into ADR. So yeah, longs on that one at the moment. Just waiting for it to go. Euro US dollar. You can't make any mind up on this one. RSI extensions, you would have been in a long from here. Second entry or first entry would have been there, depending which RSI you're using and whether or not you actually got a signal. We're pulling back beautifully into support, which is holding this morning. We've had the push up, pull back, and pushing again. So there's your reversal alert on the hourly, which is just triggered. On the 15-minute, that is a retest. It's already retested. So there was your reverse alert on the 15-minute. There was your retest. Did it twice. So yeah, looking good for longs at the moment. So this is basically euro strength, obviously, we're seeing at the moment with what's going on, I guess, with the elections, or rather the far right taking that. Out of second DAX at 3R. So big, strong rejection off of the monthly level there at ADR. So it's basically slammed straight into ADR and rejected, which is obviously what ADR is all about. Yeah, DAX, I'm out. Stuck in the hedge there. So 630 banked on the DAX. Got 430 hedged, so 200 up on the morning. And we'll see if we can get out of this FTSE. It's going to have to move. And it's probably not going to, is it? Because we've got no New York session this afternoon. So the likelihood of getting any further volatility on this is probably not going to happen. See what happens. So yeah, so EuroCAD, we'll be looking at longs. You're probably already long anyway on this one. Looking for pullback on that leg this week. Lovely level we've tested. We've got this big old drop here as well, back down into this accumulation here. So this area here, basically, and these lows here, just that previous high, is what we're expecting now. So if this breaks this week, you've got a tumble all the way down to about 250 ADR. So looking at these propulsion gaps getting filled to the downside, probably more likely going to come up into this area though this week. So good looking longs. You've had the reverse alerts already triggered on the lower time frames. Actually triggered on Friday. and that was your retest on that gap down. But yeah, it's basically looking for a rally up. So we've got no euro news this week apart from the Swiss franc tomorrow. So obviously the euro will react to the Swiss franc as well. But that's it. So it's all about US and CAD this week. So it's US tomorrow afternoon, CAD and US on Wednesday. It's US on Thursday, which would normally be on Wednesday. And then we've got the CAD and the US unemployment on Friday. So it is all CAD US this week. So we could be seeing, 4 ADRs worth of movement on these. If all this news lines up in the same direction, all the CAD is bullish, all the US is bullish, the whole thing's going to rally like nuts. Equally, obviously, if it's all bearish, we're going to get the opposite. If you get the CAD being all bullish and the US being all bearish, they'll push and pull each other around. And obviously, if the news comes out some long, some short, you're going to get a load of upward, downward volatility. So very difficult to call this week with any of these Canadian or the US pairs. Could go either way, but technically looking good for a long. If you break that level, though, you've got a fairly decent drop on your hands. But that's what position trading is all about. We don't know where it's going. So if you want to get in long now and target that, brilliant. If it does break down, you know what to do. Wait for the leg to pull back at a later stage. Euro Swiss. Again, Swiss franc's very tricky. So you've got to be bearish Swiss franc, Euro Swiss at the moment, fundamentally and technically. But technically, you have got potentially a retracement bounce going on here, but against trend. So Swiss tomorrow morning, we will know what the Swiss is doing. Their CPI increases. We're going to be down here somewhere by the end of the week. If their CPI has decreased, they're going to need to reduce those interest rates again. And we know they've already reduced their interest rates without telling us multiple times. So we're at 1.25 now. We didn't change last time. Inflation is at 1.3. If inflation goes down again, they're going to need to drop that. So that is going to make it bearish. So it's an important figure coming out tomorrow. ADR Aussie New Zealand 125. Why am I on the Euro? Have I done the Euro Swiss? I seem to be repeating myself. Did I not get through to Euro US dollar? I did, didn't I? Why am I back at the beginning again? Nobody's talking. Nobody's telling me what I'm doing, am I? I'm just going all over the place today. Aussie New Zealand 125 ADR. So that is test on Friday's high. You've got a lot of upside resistance here. It's going to be very hard for this thing to scream to the upside. Look, we've got like really strong support resistance on the way down. Good looking short opportunity. So yeah, euros. I think I've covered all the euros. Euro New Zealand covered. So basically, euro is bearish, but this week is US dollar week, isn't it? Morning, Callum, Neo. It's been kicking in the Middle East for 5,000 years. It has been kicking off in the Middle East for 5,000 years, but we haven't been trading the Swiss franc for 5,000 years. And the Swiss franc is the important thing to pay attention to when it kicks off in the Middle East. Because that thing goes up and down based on what's going on in the Middle East, basically, isn't it? At the moment, anyway. So, yeah, we'll see what happens with that one. But pound pairs as well. Again, we're waiting for the interest rate decision on the pound, which comes out the day after the US. So that's the 19th. Bailey hasn't said a word about anything to do with what we're going to see coming up for the pound moving forward. So we've had one interest rate drop, which was a month later than anticipated. So he said basically when we get to 2% target, we'll drop the rates. We hit the 2% target and they decided not to drop the rates. So inflation bounced up, which is normally when you would stabilize or increase rates, and they decided to drop the interest rates. So basically Bailey did a complete U-turn and then did a complete U-turn again. Hasn't said a word about what we're going to be doing in September. So we have no idea whether that interest rate is going to drop or stay where it is. It's not going up. I mean, if it does go up, the market's going to go crazy, but it's not going up. It's going to stay where it is, or it's going to drop. We don't know what's going on with the euro either. Lagarde hasn't given us much indication, but the original indication was that we're going to drop one, freeze one, drop one, freeze one, drop one, freeze one. They seem to be following that. The pound, I suspect, will do the same thing. So the fact that we dropped would indicate September we might stay where we are. Market, as you can see with the pound, especially against the odd, stuck. So we don't really know what to do with it. You've got 2 weeks. Now, the market tends to factor interest rate decisions in a week to 3 weeks before they happen. So normally you see the market move in the direction of the anticipated interest rate decision. We're not going anywhere, which kind of indicates to me that the market thinks that we might be stable. So this one specifically, very sideways, because it's been, if you look at all the other pound pairs, we've had a little bit of strength, excuse me, in the pound. So this is a bull against kind of a bullish pound that we've had for the last week or so. So at the moment, I'll be looking up at 150 ADR for shorts, but planning to get back up there. You can buy the lows, obviously, at the moment. But again, the same with the euro. If that fails, you've got a big old drop. There's just nothing here that would indicate any technical support. So once you break that level, you've got a big flush on your hands. So all the breakout traders will be trying to get in there. If it's a failed breakout, obviously they'll all die, but it's just very difficult to do anything with it at the moment. Pound CAD, beautiful extension. You had initial entries here on the hourly, which would have been a scale in, and you'd be out on that last week on Friday. Beautiful double top at the moment in play. You've got the reversal alert there, retest, market structure shifted short. So Canadian dollar, obviously news this week. It's all US news this week, Canadian news this week. So, you know, this is where technical analysis goes out the window. Yeah, it's a beautiful double top. I'm going to short it back down into there, or look for a 50% retracement, or look for a 61.8 retracement to exit. When the news comes out, none of that makes any sense whatsoever. It will just go where the news needs to take the news, the currency. So we're waiting. Usually on a week like this, where you've got an awful lot of news coming out, the market will tend to just do the news move and then stick around. News, stick around. News, stick around. So you tend to get the big propulsion moves, but quite often not an awful lot in between. So where we are at the moment, you could say we're flagging for a long. You could say we're pulling back into a retracement. The bias on it is very difficult because we're both dropping interest rates. So it doesn't really matter, I don't think, which way you trade this one at the moment. So any RSI extensions to the upside or downside shouldn't really be a problem on any time frame. Yeah, so sell the highs, buy the lows, and just keep doing it. Market structure is gorgeous. So it's just getting either way, really. At the moment, obviously, it's bullish long term, but that will depend on how quickly Bailey drops those interest rates. And it will also depend a lot on what happens with the US interest rates as well. Do you see any bigger pullback on the DAX? Daily's got nothing to do with intraday trading, so I wouldn't worry about the daily time frame. Doesn't matter what the daily's looking like, does it? This is the stock market. It's manufactured to go up. So the fact that it's been going up is doing exactly what it should be doing. If you want to get into it, what you're talking about is getting into a long-term short on it because it's very extended to the upside, then yeah. But if it doesn't, you need to get out because you do not want to be shorting stock indices. They're designed to go up. That's what they do. So I don't trade stock indices on any time frame but 5 minutes. I'm interested in intraday movement. What happened yesterday on the stock market's got nothing to do with what happened today. So don't really look at long-term trends unless you're just buying it for investment purposes, and then it's just obviously long only, isn't it? Just keep buying it. So yeah, it's pound CAD, pound Swiss. Again, intervention back to 50%-ish retracement. So we got a lovely rejection at the previous resistance and that propulsion move, which seems to be holding for the last couple of weeks. So fundamentally on this, obviously, we are expecting the pound to reduce its interest rates, which should weaken it. We don't know what the Swiss franc's up to. And Jordan has said he will do what the hell he likes when he likes. But my bias has got to be, in case of emergency, break glass on the Swiss franc. Sure. So I'd be interested if we get up into highs, potentially taking ADR hits. Sure. Somebody's just left the house. I know, someone's probably all right at the gym. It's so annoying. Yeah, so we're looking for short opportunities on it at the moment. But right now, you're just stuck in a range. So can't really do much with that. Pound yen we've covered. Pound New Zealand could go either way, really, this one as well. So don't really mind which way this one gets traded. There's no real bias on the New Zealand dollar. That was the last move in July where they didn't change the interest rates. We got that parabolic sell-off in the New Zealand dollar. I think for some reason the market was expecting the New Zealand dollar to drop interest rates, and it didn't, so it sold the crap out of it. But it hadn't piled into it, so there was just no sense in this move at all. It was really weird. But that's the New Zealand dollar changing its interest rates, and you're going, oh, you've dropped your interest rates, so New Zealand dollar should be weak. Yeah, just not making any sense fundamentally in the New Zealand dollar at the moment. But anyway, so propulsion gap buys, which seem to be holding at the moment, obviously seems what we should be looking for. So this accumulation or area of balance down here, we had that big rally away. We've come back in to retest this. So if the market is going to remain long, this is where you want to be looking for longs out of here. So RSI extensions to the downside, ADR hits to the downside, but it's unlikely to squeeze like this again. So obviously when you get a big squeeze like that, you get a big re-squeeze as it struggles to undo itself. So kind of either way really on this one, but I'd be much more interested in longs. But at the moment, there's no setups on it anyway. There was last week, there was a long opportunity, which you'd have been in down here. In fact, you'd have probably been in it from somewhere around here. Just didn't really do much, did it? We had an ADR move to the downside and just stuck. So longs at the moment. Pound US dollar, got out my shorts on Friday. So first entry, second entry, took one close together there. Third, fourth, out. So just wanted to reduce exposure on the US dollar. I had a little bit too much on. So got out of that one with some profit on Friday. Oh, it's a new month, isn't it? Yeah, but so yeah, so I'm flat on this at the moment. Obviously, we got news coming up this week, so it's difficult to call. Very difficult to call. We don't know what the bias is going to be on the US dollar. It's basically US dollar is going to go bear. How much buy will be determined at third week of September. So all the data coming out, I think, is going to be critical this week and next week. So if the data is good for the US dollar, they're less likely to reduce the interest rate. They're more likely to reduce the interest rate by 0.5%. So you're either going to get indecision as we get mixed data, or all the data is going to point in the direction of a bigger interest rate drop, in which case it's either going to do that or that, isn't it? Or a lower interest rate drop. So really, you've got to be kind of slightly led by the news on this. It's not something you can have a bias on fundamentally, because it's going to shift. So in theory, you should be able to trade it in any direction. So the pound US dollar is obviously the second most liquid currency that we have. behind the euro US dollar. Therefore, you get a lot of manipulation on it, and you get a lot of normal market structure. So they move it, they take profit, they move it, they take profit, they move it, they take profit, and they keep doing that. That's all they do. So it's the less squeezy of the lot. So shouldn't really have a problem with direction, with trading in either direction. The problem you're going to have is if the news goes against you, you're just going to have to hold the position for longer, and that is not something you can control. So either way, really, I'm flat on it at the moment. I have no plans to get into it. I may take a trade before the news on Friday, before non-farm payroll, but that will be based on where I think it's going to go with non-farm payroll. And if it's wrong, obviously, not a lot you can do about that. So I'll just get into a position. But RSI extensions to the downside or the upside should be able to get into either. At the moment, bear in mind, obviously, it's probably going to want to undo this week, but only if the news allows. So you kind of want to be short. So look for propulsion gap shorts to the upside if we push up. So if you get ADR hit to the upside, good short opportunity. You could short out that propulsion gap there. So drop down 5-minute time frames, look for reversal alerts, 15-minute. So we're pushing up at the moment on this one. So look for reversal alerts short. But really at the minute, it could go either way. We've got too much news coming up to be able to form any kind of bias on it because we're news driven. So especially on the US, this is the first interest rate drop this month ever in the last year and a bit. So market thinks it's going to drop. They've been scaling out of it. So we are going to start to get out of some of that, take profit on some of that scale out before the news, I suspect, which means you want to be biased short term, but it's really going to be driven by the news. The news, if the news basically says things aren't going well, we're only going to drop the interest rates by 0.25%, they're already in that position. So they're going to want to hold that position, which means they'll sell more. So we'll see what happens with it, but news. New Zealand CAD, no real long opportunities. Last short I had was there. So it's just looking for short opportunities on it really at the moment. Just mean reversions. But again, Canadian dollar could go either way. So I don't mind trading this in either direction at the moment. I just want to see a nice big extension or some kind of decent support resistance bounce where we're almost extended. But right now there's nothing to look at on it. It's difficult to call a direction on it, obviously. It's bullish, we know that, but it's not, the market structure is just erratic. It's more bullish than bearish, but you should be able to go in either direction on it. So H1M5, wait for extensions. You had one on Thursday last week. You had one week before. Yeah. So just trade it in any direction really, but at the moment you're just getting more opportunities to short it because it's rallying. But either direction, New Zealand Swiss, same thing as the rest of the Swiss, just sideways. New Zealand US got shorts on at the moment. So I've been in this one for about 2 weeks, week and a half or so. So got the extension on the hourly there. That was also a 4-hour RSI there. So that was my entry on that spike. Was looking for a resistance bounce. We just accumulated there for 3 or 4 days and then rallied through. So I was looking for these highs to hold, which we did. I took a second entry there, so I've got two pretty close together there. We slammed through it again on news. So we've just hit that propulsion gap, which they are now selling off. Next stop is there. So I've got an aggressive drawdown control position on this one, which is holding at the moment. So as you can see, I'm going to take the aggressive drawdown control position off here. And then start to scale out of some of the lowest position, basically just to keep the average nice. But this week is obviously going to be decided on news. So we'll see what happens. But yeah, looking like it needs a pullback, doesn't it? We need a profit take really from there because we had a profit take on that leg there. So that is your leg from that low. So that is your 1, 2, 3 week low. So looking for shallow retracement, 50% retracement, but we don't know which way it's going. Yeah. So again, I wouldn't put it past the Fed to turn around and say, actually, no, we're not going to bother doing the interest rates this month. You just don't know, do you, with the Fed? They don't know. So yeah, longs out of this area, and we're looking for resistance up here if it does not work out. But I think they'll probably undo this leg first before they even attempt to go up there. So short at the moment. Doesn't matter which time frame you're trading, you've had plenty of short opportunities to get in. So hopefully today we get some US dollar strength. It'd be nice to get that target hit, get that propulsion test. So that's the reason for my target being in there. It's a propulsion gap. So I want it above that high. US dollar CAD, so I've covered the US dollar, Swiss and yen really. Euro yen just hit ADR. That euro is really screaming today. No more movement on the indices. So got longs on this as nothing last week, just didn't move. So first entry was back here somewhere. Second entry was in here, there. Third entry on the drop. So I'm looking for propulsion gap test to get out of that trade. And then I will remove, well, it depends what happens. Because it's the thing with this one is obviously it's all US CAD news this week. That's all we've really got, isn't it, apart from the Swiss. So we could easily see 200 ADR moves. So it's a case of really ahead of news. In fact, I'm just going to move my TPs up here. It's not going to get there, but it's a news event exit, isn't it? So it's a case of if this spikes up to 200 ADR tomorrow, for example, I don't want to be getting out there. I will just be monitoring this around the news. So I'll be watching to see where it goes. But last week, obviously, Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, we didn't go anywhere last week. So we had the news. This is Powell basically saying interest rates are coming down. Okay, we knew that. So you've given us basically the option of 0.25% or 0.5%, which we were kind of expecting. So knee-jerk reaction, now what? Waiting for the news. So we now need confirmation. So it's going to take off in one direction or the other potentially this week. Depends on the alignment of the news. As I said, with news trading, or when you're paying attention to fundamentals, yeah, if this comes out as positive, obviously the US dollar will rally. If the next day that comes out as positive, we get a continuation. If that comes out as negative, we undo the previous day's move. Then we wait for the next one to come out. And it all depends on the alignment of this. If it's a bull and a bull and a bull, it's just going to rally all week. The fact that we've got the Canadian interspersed between all of this as well is also even more confusing for anybody trading any US or CAD pairs because they move together. So if you get a massive bullish news event coming there, and then you get a massive bearish news event there, it's going to undo the US bullish move as well. So this week is just hold on and plan your trades. Yeah, if the news goes your way, brilliant. If news doesn't go your way, scale in and wait for the news to go your way. It will at some point. So it's just this week, any exposure you've got on US and CAD, if you can get out of some before the news, do so, depending on how exposed you are. Because obviously the more exposure you have, the more risk you have on those currencies. So, but yeah, I don't see any reason why we shouldn't get some bullish news moves this week. So that's the low from previous month. We've got this little accumulation here. So this is where we kind of collapsed. We had another accumulation, then we had the news. So should be worst case scenario, really getting up into this area here. Yeah, that accumulation. So testing that area really. And then obviously, depending on the fundamentals, it's either going to go and continue that way or not. So it's difficult to see how we're going to get positive US move on a interest rate drop. We can do that because the market's already factored in the interest rate drop. So it's a case of there is easily a possibility to undo this before that happens. And even then, if it's only 0.25%, we kind of were expecting that. So we may not even move anywhere on it. It's really hard to tell. We haven't had an interest rate change for a year. So it's difficult to know whether the market's going to really concentrate and pay attention to these interest rates, or whether they're so fed up with the Fed changing their mind every 5 minutes that they're just not going to bother. So it's really hard. There's lots of factors at play with the US at the moment as well. Obviously, we've got an election year as well. So US dollar Swiss obviously is bearish. We did just break the lows last month. We've pushed back up into them, into the above the low. So this one could go anywhere. Propulsion gaps orphaned, millions of them to the upside. It just shows you how strong the Swiss franc is, and because we've had a weak US dollar as well. So so got potential long. You got some backup coming up there, but kind of want to be doing that, don't you? But fundamentally, that's going to potentially happen. So very, very, very difficult to call anything at the minute. We're going into, I would say it's probably going to be the busiest fundamental month we've had for a year or so. So this month has got the potential. We've got all major interest rate decisions coming out this month, which are key to the future movement of all the currencies. And the US obviously kicking it off. The difference we've had this time is the US hasn't gone first. It's going last. That's not normal. We're usually following the US dollar. Everything the US does, it knocks on and affects everybody else a month or two later. Everybody's gone first this time. So it's really hard to call what the market's going to make of the US interest rate decision, because we're used to them leading, not following. And it's an election year. So September, October, November, it's going to be a crazy US time, I think. Scalping the 5 minutes. You told me not to do that. No, you can do whatever you like, Franco. I just don't do it. There's nothing wrong with scalping if you're good at it. But use a stop loss. I was reading over the weekend a paper published by I think he was a university graduate who was studying economics. And he was interested in trading. So he wrote this paper. Basically, it's kind of, to sum it up, it was quite complicated. I struggled a little bit to follow some of it, but it was, in a nutshell, the pros and cons of stop losses, which is why it sort of attracted my eye. And the conclusion he came up with was basically a stop loss is detrimental to trading, period. That's it. So, you know, obviously you have to summarize your paper. The summary was stop losses overall have a harmful effect. Someone's left the house. A harmful effect on your P&L. And that was the important part. The P&L is negatively affected by using a stop loss. There was a lot of conversation in the paper about risk. Very, very, very important. But the stop loss is the thing that is detrimental. Yeah. So placing an order in the market to lose you money is going to lose you money because you've placed an order in the market to guarantee the outcome. What you can't do, so if you go short here, for example, today, you go short there, you put a stop loss there. If the market does that today, you are stopped out. If you don't use a stop loss, you are no better off, you are no worse off, you are back to where you were, but you are not stopped out. Yeah. Because we know about ADR and we know how important the average daily range is to monitor on an instrument, we can see what the worst case scenario is going to be. His argument is you don't have to place an order if the worst case scenario starts to unfold that you lose money, because the worst case scenario can start to unfold and then correct itself within 24 hours. So the best exit strategy, and again, this is what my friend also does, is end of day exits. Yeah. So, or timed exits, but end of day exits is a timed exit. But timed exits are after X bars, 4 hour, hourly, daily, whatever the time frame is, after X bars, exit, regardless of outcome. Or at end of day, exit, regardless of outcome. Because most traders are taking a trade based on a bias. So, you know, all the guys are saying, what's your bias, long or short today? How do you know what it's going to do today? If there's a moving average going down, it's got nothing to do with the fact that the market is going to go down. It went up that day, it went up that day. The moving average, I can tell you right now, is above price. So they should be selling it. Didn't do that. Yeah. So it's interesting just to read other people's kind of view on what I do, basically, which is stopping yourself out. You've still got to control risk. You still need a mechanism for controlling risk. And obviously there was a part in there about black swans, which is nothing you can do about those. But, you know, it's one of those things. It kind of backs up what I keep saying. You know, how you get into a trade hasn't got anything to do with making money in the market. It doesn't matter whether you've got the best strategy or the worst strategy in the world. You can flip a coin and still make money, because if you look at where price is potentially headed, you can plan for that bad move. Exit. You don't have to take the loss and then wait for it to get there to take your second opportunity, which again was something else that he covered, was how stops negatively affect your P&L, but negatively affect your trading psychology as well. I'm going to have to turn that app off. It's driving me nuts. Because once you're stopped out on there, you are now owed by the market, and the market is now owing you money. So what you're going to do is you're going to wait for it to get to the next place you expect it to get to, and you are going to get your money back. However, when price does this, you don't get the opportunity to get your money back. So it not only has a negative impact on your psychology by stopping you out, it has a double negative impact on your psychology by not allowing you the opportunity to get your money back that it owes you. It doesn't owe you anything because you're trading something at random. This is why I say don't trade the 5-minute charts and don't scalp, because you are literally playing with algorithmic random price action. Yeah. You can tell it's algorithmic. Yeah, because it will, and this is where it's people go, yeah, well, you've just proved the point. You should be scalping the 5-minute time frame. That's one instance out of however many others that didn't work that today. Yeah, we had one double top. You are stopped out 6 times and you got one trade and it didn't make back the 6th you lost because it's random. Yeah, but it's interesting. I can't remember, before somebody asks, I can't remember where I found it. It's one of those things that popped up on my Facebook feed, basically, which I just went and read. Obviously, he's trying to sell something as well. But anyway, it was an interesting paper. It wasn't his paper. The guy that is interesting, the guy that was selling something was using somebody else's data to promote his site, which I thought was a bit naughty, but anyway. Have a great week, all. Franco, you're off, up all night, tending to my barbecue brisket. Ooh, very nice. Would you take any more trades on the DAX? Aussie dollar yen. Have we got some yen movement? Big, strong, weak move in the euro, in the yen. So yen's being sold off. Probably Swiss franc as well. Yeah, Swiss franc also being sold off. So this is something safe may have just happened somewhere. Maybe a de-escalation, peace talks in the Middle East or something. Don't know, but they're piling out of Swiss and yen. Would I take any more trades on the DAX? Up to you. If you're going to trade it, I wouldn't fight that. This is where you want to be shorting. So right now is a lovely short opportunity on the DAX. But you've got no New York session to help you today. So if it decides it doesn't want to go anywhere today, which, you know, on a day like this, rotation is the normal stance when there is no news and you've got one session shut. I'm not, obviously, because I'm done for the day, but well, not necessarily done for the day because I've still got to manage this. But if this doesn't go anywhere, I'm not getting out. In fact, what I'm going to do with the FTSE is I'm just going to move TP below the monthly highs. So if we do manage to get up here today, I'll exit the longs. Shorts, I'll go for the gap. Just move that up a little bit. But yeah, up to you. I mean, I'm not going to. We're 1.5 hours in. So we found the low of the day potentially, which is there. Or the high of the day, which is there. One of those two is true with a 95% accuracy. 1.5 hours into the session, you've either found the high or the low of the day 95% of the time. It's highly unlikely it will do that and that today. It could do that or it could do that, but it won't do that. So your decision is 50-50. Have we found the high of the day or the low of the day? If you think we've found the high of the day, you short it. If you think we've found the low of the day, you wait for a pullback and long it. Odds are always 50-50. It's binary. It goes up, it goes down. That's all it does. Right. That's all I've got for you today. There's nothing else really much to discuss. It's a quiet day. Odd New Zealand is 125. I will keep an eye on this Aussie New Zealand. So if we can get a 150 ADR, so I'll keep an eye on the dash. If we get 150 ADR today, I might try a short on that. Just an intraday short, but obviously, you know, and this is again just going back to that paper and how my friend trades stock indices. You know, what most people will do when they get into a trade, let's say, for example, it gets to this 150 level and we hit this nice resistance with the weekly levels and we short it here, it's either going to not work out, in which case then I'll just close it there, or it will work out, and wherever it is, it's profit. But what I'm not going to give the market the opportunity to do is to take my money away from me and then prove me right. That's the big psychological difference. That's the most annoying thing, is when you short something, place a stop loss, it takes your stop loss out and then does exactly what you said it was going to do. That drives you more mad than if you hadn't have taken the trade. It makes you crosser. You're like, I've just lost money because I got it right. Yeah, that's the psychological issue that it causes. It's an interesting paper. More along the lines of psychology, as most student papers are. It's all about trying to solve an insolvable problem, but proving what I keep going on about is true, which is why the banks and the institutions all do it the same way. Yeah, they don't place orders in the market to lose them extortionate amounts of money if they're wrong. They wait for the market to move in their direction because that's all it does. Up, down. You just wait for the down if you've gone short, you wait for the up if you've gone long. And if it keeps going down and you don't like it, close it. But don't get out because it's just moved. That's ridiculous. But anyway, you know about that. I've been talking about that for years. Right. So those are your ADRs, RSIs, as I say, there's nothing much today. And I'd be careful if you're trying to do too much new today, because the likelihood is you're going to enter a trade and not go anywhere. So I've got plenty of exposure on at the minute. Still got a little bit too much US, unfortunately, but there's not a lot else I can take. In fact, I can't take an Aussie New Zealand. God, what now? I can't take an Aussie New Zealand because I've got exposure on already. So I won't be getting into that one. Right, I'll be back tomorrow, same time. No, I won't be back tomorrow same time. I'll be back tomorrow afternoon, usual time. So 2:15 tomorrow afternoon, we'll trade the New York session. We should get some decent movement tomorrow. obviously, because we've got decent news. So tomorrow morning, if you've got any Swiss franc exposure on, be ready for that. And while I'm on tomorrow, we've got the US PMIs. So that's our first US news of the week. So I'll be on at 2:15. And then obviously we'll trade the New York Open and have a look at how it goes. If you want to get into anything else today on the DAX and that, I would just be careful because you're not going to get an awful lot more movement, I don't think. But we'll see. I think the most likely move today is that. I'm not quite sure if that was related to the German right-wing party or not, or what it was. But obviously that's your move. So you've probably missed it if you weren't on it. Right, so I'll be back tomorrow. Anything you need, let me know. I'll be in Discord or Telegram. Other than that, have a good day, and I'll see you next time.